Allied blenders. Now, this entire space has been in the spotlight after the change in the liquor policy of Andhra Pradesh. Alok Gupta, Managing Director at Allied Blenders and Distilleries, is joining us now to talk about not just impact of what's happened in Andhra, but the business outlook as well. A lot of exciting announcements in the last few weeks from Allied. So, Mr. Gupta, thank you for speaking with us here at NDTV Profit. Great to have you on. Let's start with the Andhra piece. How much of an upside is it for Allied? How do you see this move?
Morning. I think so far what we are understanding of the policy, we believe that there is a significant upside for all national players, including us. We have been operating in Andhra for the last few years. Of course, our volumes have come down to almost 50%. So from where we are, we only expect an upside. The fact that the retail is getting privatized and the fact for now the current prices are being maintained, I think is indeed a good sign.
So, just to give us a sense, when Andhra shut as an option for you and popular brands that were being sold there, what was the kind of hit and what is the kind of recovery that you see now as revenue share coming in from Andhra?
So, if you go back, we used to do north of 4 million cases in the state of Andhra Pradesh and we saw almost a 60% decline in that volume. But in the last few months, ever since the new policy has been spoken about, we're already seeing almost a 30-40% correction from our base. So as the private retail come in, we are hopeful that we'll be back to our earlier levels, if not better.
Considering that this policy also talks about liquor being available at lower cost, do you see any impact on margins in that sense? And what is the kind of volume growth you're expecting?
Well, I think what has been done rightfully and I think very intelligently is that they have fixed up a price point saying that we'd like to offer, a quality brand at 99 rupees. Of course, a very challenging price point. They're also worried about the fact that they want to avoid illicit. So we are looking at that price point, but it depends on what the excise duty structure is going to be on that price point. So it's a little too early for us to say whether we'll be able to participate or not. But I think the government is quite open to suggestions as to what can be done to be able to offer a high quality brand at 99 rupees. So I think some solution will emerge.
Hi Alok, it's Samina as well joining in. And there's so much happening with your company right now. I mean, beyond Andhra Pradesh, I think your foray into the premium segment, I've tried that Zoya Jin and it's so much happening. Talk to us about currently where your market share is at. Where do we see it at the end of the financial year? A. B, and how is the response to Zoya been? I believe it's a premium product that you're bringing to the masses, better margins. What do you aim or you see in the next 2 to 3 years in terms of revenue between premium and non-premium segment?
So happy that you tried the product. I hope you enjoyed the experience. I think for us, launching our first luxury brand in gin was a very well thought move because it was a brand out of our comfort zone. 99% of our revenue comes from whiskey. So getting onto the luxury gin was indeed out of our comfort zone. We are very happy with where we are in terms of being able to make sure that there's consistent quality. As you understand, luxury products need that last mile care before every bottle that moves out. When we launched it in Haryana, January 2024 this year, as we speak, it's already getting rolled out in about 10 markets. And that's just a reflection of the fact that we're happy with the playbook and the way the brand is getting the response. We are also in the next 4 to 6 weeks launching its first variant and hopefully an interesting one which the Indian consumers have not seen so far. The entire focus on the luxury brand, moving on to the next question, there is about 12 to 15 million cases right at the top in what we call as luxury segment of the 410 million cases market. We've not had presence there in our portfolio and we've picked up about 5 to 6 flavor price point combination, both whiskey and non-whiskey, where we believe we have a better chance to win. So it's a combination of gin, which is Zoya. We are launching a luxury vodka, October pre-Dashera. We're also rolling out our blended malt scotch and thereafter a premium dark rum and one more brand to roll out. So you're right, absolutely a lot of action. We're also building a vertical called Prem brand, which is largely focused on getting onto the key accounts. So the outlook on this segment is that we are hoping that over 3 to 5 years, if we can garner a double-digit market share, I think we'll be in a happy space.
Alok, a couple of weeks ago, you announced this tie-up with Ranveer Singh. Tell us how that is working. Is that a big marketing cost coming in? I know you're going to launch this whole line of luxury brands. Give us a bit of more detail on this. What is it going to cost you to have? Is Ranveer Singh putting in money, or is it going to cost you a lot to have him on board?
No, I think he's coming in as business and creative partner. Essentially, I mean, so far, whatever little I've seen is pretty high energy in terms and intense in terms of what we want to do there. So all the brands that I've just spoken about, which is our luxury gin, our blended malt scotch, luxury vodka, this will all go through this new company. More importantly, we are also going to build a new brand there, right, in which Ranveer is going to be absolutely involved, both as a business and a creative partner. So we are quite excited with the way things are. The way things are headed is absolutely involved and wanting to play a much more role in being the brand mentor.
Quickly, I think one of the key reasons for that big fundraise was to repay a significant part of your debt. What does debt stand at, and what is your debt equity at? Because this, I assume, would have improved your operational performance significantly.
So I think as part of the object of the issue was to repay our debt. So we closed our IPO on 2nd of July. By 12th July, we have repaid all the debt.
Right now, Alok, on the books anymore, you said you've repaid all your debt. Is that what I heard?
Yes, absolutely.
Oh,
right.
fantastic.
So we paid all our debt.
Yeah.
Yes, and right now we just have working capital, so we do not have any other debt sitting on our books. We are looking at interest cost coming down almost by 50%. That leaves greater cash in the system to drive growth. And as you know, we've spoken earlier, we're looking at driving.
What will that impact be on margins in that case if interest cost is going to come off by 50%, which is one of the biggest costs that you were bearing up until your listing?
So it will not have an impact on the EBITDA margin directly because that line item is below EBITDA, but it certainly leaves cash in the business to drive growth. And we are looking at driving a double-digit growth, largely coming from our P&A segment, which hopefully this year in value terms will be north of 50%.
This expansion, new product launches will come in from this money that you're saving in terms of financing cost.
Yes, a lot of marketing A&P will come from the cash flows, a great amount of free cash flow that is coming on account of lower interest cost.
Alok, just last question. Wondering what your quarter two, quarter three outlook is looking like, festive season, but also some elections in key states, so you will have dry days as well. What is the picture looking like for you?
Well, I think H1 has been choppy for everybody, largely on back of elections and many other things in the market. And this is the last phase of elections, so fingers crossed. By the time we get into early October, most of the elections are over. So I think we're quite optimistic towards the H2. Quarter two is looking good for us. It's better than quarter one. And as we get into the festive season with our luxury portfolio, I think we are in a good space. In our P&A segment, we have rolled out the all-new Sterling B7. It's already out in 5 markets, so the entire attempt is towards getting the growth back. Iconic continues to do well. What we sold in all of last year, we are pretty much sold in H1. So this brand is sitting on a 4.5-5 million trajectory. So all in all, it's looking good, and we're looking forward to H2.
Okay. All right. Thank you so much for speaking with us, Allied Blenders. There are exciting things happening in this space. H1 has been rough, but typically H2 will get better and festive season around the corner. So big spends there. Andhra has opened up, and that will help as well.